After I published my first video on the One Big Beautiful Bill Act, additional information has come to light. Some of this information is about additional provisions, and some clarifies statements from that original video. I'm the Tax Geek, and here is more about the One Big Beautiful Bill Act, or OBBBA, oversimplified. If you've gotten here without watching my first video on the subject, watch it now by clicking above or in the video description. This video won't make much sense if you haven't watched the first video. First, some clarifications. In addition to the new additional standard deduction for taxpayers age 65 or over, the OBBBA gives a boost to everyone's standard deduction for 2025. Those new standard deductions are being shown on the screen. This changes the resulting standard deductions I calculated in the first video to $23,750 for a single taxpayer age 65 or over and $46,700 for a married couple filing jointly where both spouses are at least age 65. Next, the charitable contribution deduction for non-itemizers is $1,000 for a single or head of household filer and $2,000 for a married couple filing jointly. And lastly, the following provisions of the new law are not available to married couples filing separately: the tips and overtime deduction and the additional $6,000 standard deduction for taxpayers age 65 or over. Now, some additional provisions I missed in the first video. Up to $5,000 of the maximum $17,280 adoption credit is now refundable, which means if your adoption credit turns out to be larger than your tax liability, up to $5,000 of the credit will be refunded to you. This refundable amount will be indexed for inflation starting in 2026. Under the OBBBA, to qualify for a qualified business income deduction, you must have at least $1,000 in qualified business income to get the deduction. But for those taxpayers that meet that threshold, a minimum deduction of $400 has been established. The threshold for businesses being required to issue 1099-K forms has been returned to $20,000 or more than 200 separate transactions during the year. The threshold for issuing 1099 NECs will be raised to $2,000 from $600, and this threshold will be indexed for inflation in subsequent years. Companies may still issue 1099-Ks and 1099 NECs for lower amounts, but they are not legally required to do so. So you might still receive these forms for independent contractor or gig economy work, even if you are paid less than the threshold amount. And finally, the maximum Section 179 deduction, where certain long-lived business assets can be directly expensed in the year they went into service, has been increased from its current level to $2.5 million starting in 2025. And that's all for now. I have a feeling this won't be the last time I'll be producing update videos clarifying this extensive new law. Additional resources and information are linked in the video description. If you found this video informative, please give it a like and subscribe to the channel for more oversimplifications of our increasingly overcomplicated tax system. And of course, your questions, comments, and suggestions are always welcome in the comment space below. Thanks for watching, and I'll be back soon with more of your taxes oversimplified.